Hello, welcome to Accounting with Appropriation. Today, we are going to start our second part of Fundamentals of Partnership. I hope you have gone through our first lecture. If not, the link is available in the description below. I suggest you to watch that first and clear your basics. Let's start. Our first topic today is interest on loan. The loan, which is either given by firm to its partner or by partner to his firm. Please remember that there is no need to by heart the general entries as we can make them easily if we are thorough with concept. Let's see how. Remember, we will also consider ourselves as firm. Now, when firm or we have given loan to the partner, he will give us interest. It means we will earn income, and as studied in 11, all incomes and gains are credited. So here we will credit interest on partner's loan account and debit partner's capital and current account. Confused? See, partners capital or current account because already partners have given us some amount in form of capital. So it is not appropriate to ask for more money again and again. So it is adjusted through capital or current account. And yes, we will study the concept of current account in our next class thoroughly. Then pass the closing entry, that is interest on partner's loan account debit to profit and loss account. Now, when we are taking loan from the partner, then we must pay him interest. So here the interest will be an expense for us. So the concept applied here is all expenses and losses are debited. So our entry comes as interest on partner's loan account debit to partner's capital and current account, and closing entry profit and loss account debit to interest on partner's loan account. Please note here that if interest is due but not paid, then partner's loan account will be credited in place of partner's capital or current account. Students, do not get confused in the concept of entries, as in this class itself it will be repeated many times. So I hope you will be able to make the things clear easily by the end. Okay, let's come to our next topic, that is rent to partner, which means how rent paid to partner will be accounted for if we are running business in premises of any of our partner. So, as we can see, the rent is paid, which means it is our expense. Remember, we are considering ourselves as firm. So, as we know, all expenses and losses are debited. So, here rent account is debited and credit what goes out. So, cash or bank account is credited. So, the entry comes as rent account debit to cash or bank account, and closing entry profit and loss account debit to rent account. Don't worry, this passing of closing entry will also be discussed as we move ahead. Let's go and study to make the concepts more clear and avoid cramming of journal entries. So here we paid the rent to our partners, but what if we are not having enough cash to pay the amount. Then in that case, instead of crediting cash or bank account, we will increase capital or current account of partners by passing the entry, that is rent account debit to partners capital or current account, and closing entry profit and loss account debit to rent account. Okay, let's relax and move to a very easy topic, that is accounting cycle. Here, an event occurs, then we check whether the event is of financial nature or not. If it comes out to be of financial nature, we measure it in terms of money. Then the transaction is recorded in subsidiary books or journal, then posted to ledger. Then, with the help of balances of ledger account, we prepare trial balance. Then we move towards our financial statements. So we prepare trading account, which gives us gross profit. Then we prepare profit and loss account to ascertain net profit. This net profit is then added to capital account and balance sheet is made, which tells us about our financial position. But this accounting cycle works for sole proprietorship only, as in sole proprietorship there is only one owner, so whole net profit earned is transferred to his capital account. But in partnership, as there are more than one owner, so the net profit earned is distributed among all the owners, partners. So, for distributing of net profit, an additional account is prepared, that is profit and loss appropriation account. So, for partnership firm, the accounting cycle followed is: as we can see, it is same till the preparation of profit and loss account, or we can say till the ascertainment of net profit. Then, for distribution of this net profit, we prepare profit and loss appropriation account, and then our balance sheet. We have already discussed in 11th how we bifurcate the expenses into trading and profit and loss account. So now let's discuss what will come in profit and loss appropriation account. For that, we need to bifurcate our expenses again in two types, that is charge against profit and appropriation of profit. In charge against profit, deductions are made to determine net profit, while in appropriation of profit, distribution of this net profit is made among the partners. In case of charge against profit, expenses are accounted for in any case whether there is profit or loss. But in case of appropriation of profit, expenses will be provided for only in case of profit. Expenses relating to charge against profit will be transferred to profit and loss account on the debit side. and the expenses falling under the category of appropriation of profit will be debited to profit and loss appropriation account. Now, let's learn how our new account, that is profit and loss appropriation account, is prepared. Here, I would like to remind you that the topic we are going to discuss will be part of each and every question we are going to solve from here in partnership. So, please understand this carefully and rewind the video in case of any doubt and watch again. And first, you understand the concept and then you can pause the video to pen down the notes. Here, we will learn how to pass journal entries relating to profit and loss appropriation account, and simultaneously we will understand how these entries are posted to ledger account, as both journal and ledger are equally important from exam point of view. Ready? Let's begin. First, transfer of net profit from profit and loss account to profit and loss appropriation account. Let's try to make entry instead of by hearting it. As we know, all incomes and gains are credited, and here we have net profit, which means balance of our profit and loss account is credit. Now, to transfer the balance, we will debit profit and loss account and credit profit and loss appropriation account. Now, we have profit in our profit and loss appropriation account. And remember, balance of profit is credit. So, this will be transferred to the credit side of profit and loss appropriation account. Understood? Please note this down and revise once. Okay, now let's move to our next entry for charging interest on drawing. Remember, we are considering ourselves as firm. It means partner has withdrawn or taken some money from us, so now we will ask them to give us interest, as we are taking receiving the amount, so it's our income. So in again, in all incomes and gains are credited, so we will credit interest on drawing account and deduct partners capital or current account by debiting their accounts. Then for closing entry, interest on drawing will be debited, and as it is transferred to profit and loss appropriation account, so it will be credited. Again, we are receiving the money, so it's our income, and hence will be posted to the credit of profit and loss appropriation account. Please note this and revise, and in case of any doubt, please rewind the video and listen to it again. Next, for allowing interest on capital. Here we as firm will give interest to our owners, partners for the capital they have provided us with. So, as we are paying the amount, it is an expense for us, and we already know that all expenses and losses are debited. So, here we will debit interest on capital. Now, as this is given to partners, so it will increase their capital. The balance of capital is credit, and as studied in maths, minus minus plus, which here means to increase a credit account, we must credit it. Again, minus minus plus, which means to increase a credit account, we must credit it. So, partner's capital or current account is credited. Then, interest on capital account, being nominal in nature, will be transferred to profit and loss appropriation account. And yes, partner's capital account, being personal in nature, will be shown in balance sheet. Interest on capital, being an expense, will reduce our income. So it will come on opposite side, that is debit side of profit and loss appropriation account. Next entry is for allowing remuneration, that is salary or commission to partner. Here also we are giving, so it becomes an expense. So the same concept is followed as of interest on capital. Being an expense, remuneration is debited, and partners' capital or current accounts are increased by crediting. Then the closing entry, credit partners remuneration account and debit profit and loss appropriation account. So here profit and loss account is debited, so partners remuneration will be shown on the debit side of the account. Next, for transfer to reserve. Do you remember what is reserve? Reserve is an amount kept aside out of profit as saving. So, being part of profit, reserve too has credit balance. So, we will credit reserve account and debit the place from where we are taking it, that is profit and loss appropriation account. Now, this entry will also be posted to the debit of profit and loss appropriation account. Then, our last entry, that is transfer of credit balance, or we can say transfer of profit to partners capital account. Here we already know that profit is transferred to capital account, and when partners are given profit, their capital will increase. So we will credit partners capital or current account and debit profit and loss appropriation account. Then this entry will also be posted to the debit of profit and loss account, as we have debited profit and loss appropriation account in our journal entry. Now, let's look how the amount of profit is derived. Here, this is balancing figure of profit and loss appropriation account. Once ascertained, it is distributed in profit sharing ratio among the partners. I know it has already been too much for today, but please let's study one more small topic so that we can complete our concept and start fresh with a new concept in our next class. Here we studied how profit is appropriated among partners. But what if there is loss? Well, then obviously we have studied in middle of the class that in case of loss, partners are not provided with any appropriation. Just the loss will be distributed in profit sharing ratio directly from profit and loss account. And what if appropriations are more than available profit? Let's look. Suppose there are two partners A and B, and the amount to be given to them as per partnership deed comes out as rupees 50,000 and 1 lakh, but the profit available with us is rupees 75,000 only. So here in this case we will distribute the available profit proportionately. So A will get rupees 25,000 and B will get rupees 50,000. I would like to suggest you to watch this video once again to brush up the concepts and their usage. If you like the class, please like the video, subscribe the channel, press bell icon for all latest updates, share it with more and more students and comment your views below. That's it for today. This is Accounting with Arpit Garg signing off. Bye bye. Take care. Keep learning. Jai Hind.